Okay, fantastic. So welcome everybody to today's Commodities Corner presented by myself, Phil Carr, at the Gold and Silver Club. Enjoy today's session. We will, of course, be going through live market analysis. We'll go through a watch list of trade ideas. We'll be providing you with a forecast where we expect gold, silver, crude oil, and the commodity currencies to be heading next. As always, we'll be providing any support required during the session and answering questions as well. So before we get into it, let me just introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. And over the last 10 years, myself and my team of experts, we have trained and mentored thousands of private traders from all over the world on our exclusive research-driven strategies. For further information on our services, please just go to www.jointhelivetradingroom.com. I would also encourage you as well, if you would like to be kept updated with the commodity report that we're going to put out this weekend with all of the forecasts for the week ahead after the close of the markets today, make sure you go over to YouTube, search for the Gold and Silver Club. We've got hundreds of videos on YouTube, and just make sure that you're subscribed to the Gold and Silver Club YouTube channel, okay? Because you'll then get notified when we put out the latest report on the commodity markets. Okay, fantastic. Good. So with that, let me just go over. I'm going to do a screen share and I'll talk you through our favorite trade ideas right now and also the narratives in the market at the moment, just to really give you a sense of what we're looking at, the trades that we're in currently, and what we're predicting really as we get towards the close and as we go into next week as well. Okay, very quick check-in. Everyone can hear me okay, and you can also see the presentation as well. Fantastic. Thanks very much, Sharice. Okay, good. Right, so first of all, we'll have a look through the top movers so far today. And you'll see here very clearly, platinum is leading the move, up 0.5% on the day at the moment. The pound actually retracing slightly here, up 0.3% on the day. The New Zealand dollar is up 0.25% on the day. Australian dollar catching a bid here, up 0.2% on the day as well. Gold, of course, we've seen a breakout today to 2-week highs. It's currently trading up 0.17% on the day. Silver is about flat on the day at the moment. Euro is slightly negative on the day right now. Oil has seen a big move, up 1.65% on the day, and the dollar is up slightly on the day at the moment. So with that, I'll take you over some of the major drivers that we've seen in terms of the narratives in the market at the moment. So first of all, gold has broken out today to 2-week highs. It retested 1,320 US dollars per ounce. It's the highest level that gold has managed to get to over the last 2 weeks, after weak US economic data, which has compounded concerns over global slowdown and also dialed down the chances of the US Federal Reserve raising interest rates this year. We also saw that yesterday from the retail sales as well, which came out negative. That immediately boosted gold over 100-point move, in fact, off the lows yesterday. So gold really caught a bid off the back of the dollar, pulling back slightly from that data. But we've since had more negative data as well, which has really pushed the price here lower for oil. Now, excuse me, for gold, has pushed the price lower for the dollar, which has managed to support gold and also oil, in fact, as well. With that, I will actually go over to oil, seeing as I've just mentioned oil, because oil has seen quite a large move over the last 24 hours. In fact, oil prices have now broken out to the highest level in 2019, above 65 US dollars per barrel for Brent crude oil. WTI crude oil broke back above 55 US dollars per barrel today, climbing above those highs, their highest levels this year, as OPEC-led supply cuts and this week's announcement of a higher than expected cut by Saudi Arabia have encouraged investors to buy into oil. Now, we have been anticipating this, certainly on the higher time frames. The weekly chart, the monthly chart have all been looking really bullish. There's something known as the February effect for crude oil, which is where often it really picks up momentum from approximately now, really, from the midweek, from mid as we go into February, mid-February, and then certainly into next week and the following week. And I'll talk you through that when we look at the charts, but effectively I'd be looking at potentially targeting about $60 per barrel on WTI crude oil as we progress throughout the month of February, providing we get confirmation as we go into next week. So oil is up quite significantly on the day at the moment and overall on the week too, in line with normal seasonal tendencies for this time of year. We've also tended to see gold, of course, catching a bid here off the back of weak data. We've also got US dollar, Canadian dollar, which has been selling off. It's been quite weak with the inverse correlation you often see with oil. So, of course, we know that when we do get a breakout on oil, often you can trade the inverse correlation via the US dollar CAD as well, which has certainly been the case. And we have seen some support come into the Australian dollar and also the New Zealand dollar, those commodity currencies over the course of this week as well. So we've seen that really get strong support. New Zealand dollar flying above the Australian dollar over the course of this week, headed for a hefty weekly gain on Friday after bears were badly wrong-footed by the country's central bank, leaving its Australian counterpart near its lowest level against the Kiwi since 2017. So we have seen a lot of pressure to the upside for the New Zealand dollar over this week, and we'll have a look at that on higher timeframes. But it's certainly been quite a considerable move. But often what you see is that correlation. So if the New Zealand dollar has had such a strong move, you would expect a certain degree of follow through on the Australian dollar as well, which is actually what we're seeing at the moment. So with that, I'll take you over to the charts. First of all, we'll focus on the commodities. I'll go higher time frame initially, and we can drop it down into lower time frame afterwards. So gold, first of all, we're on the weekly chart right now, and support has come in certainly just above 1,300 US dollars per ounce over the course of this week. The price action has springboarded from that level. It's about over 100 points off the lows this week, currently trading at 1,300 and just under $15. It broke out to $1,320 earlier on in the session. To me, it's what is known as a price structure known as tweezer setup. So essentially what I'll be looking out for next week is follow through, break above the 2-week highs next week, and then we should be on track for a revisit back towards a swing high. If we break above the swing high, I would then be targeting the 1330 zone for gold. Certainly on the weekly there, you've got a previous level of major resistance turning support above 1300, springboarding just above the 1300 zone. A lot of buyers not even waiting actually for the price to get to 1300. They've been buying in at 1302, 1303 and maintaining the price at those levels. So very shallow retracements, but range bound trades. So for 2 weeks now, gold has moved within a 200-point range, very much like it did before at the beginning of January. In fact, for 3 weeks, gold continued to consolidate. Then when it broke out, it had quite a significant breakout to the upside, over a 300-point breakout. And a lot of that actually happened over the course of one day, following on from the European Central Bank announcement a couple of weeks back. And you want to look out for that. The more gold consolidates here within the overall upward trend, when it finally breaks out, it could actually be a really large move. Now, moving over to crude oil. Crude oil, for those of you that actually watch our week ahead report as well, we discussed the potential for crude oil to continue to ricochet between support and resistance, much like the price action did going back to January of 2017. So you kept on finding support around that 51 to 52 handle back then, and then resistance above around the 55 to 56 zone. And we're just continuing to see the price action coil within those zones at the moment. You've definitely got overhead resistance at that layer of resistance at the 55.75 level, which we're at the moment. The weekly chart, to me, if you look at the major levels, looks primed with a box set up there to break out going into next week. If we break above the weekly highs next week, in theory, $60 per barrel is really the next major significant target here for oil. If you look at that on the monthly chart as well, we've got a bullish engulfing candle, a railroad price structure, a lot of pressure building on the monthly there. And you can see what happened previously when we broke out from the monthly. We then hit 60, 65 and continue to follow through all the way up there. So it's quite significant where we are at the moment for oil prices. If we do get a breakout, you can see we're knocking on the door at the upper end of the range. We've got the Baker Hughes oil rig count, which is due out to come out later on today in approximately 2 hours time. Oil, in my opinion, is certainly a buy, but I'd like to get a better price or get it on a breakout going into next week. That's what I would be looking out for as we go into next week as well for oil there. And you can see the major levels that we're looking at the moment is continuing to coil in price. Now, Brent crude oil, if you look at Brent crude oil price action at the moment, Brent is leading. It's at the highest level since 2019. It's now climbed above 65 US dollars per barrel. You can see the breakout this week has taken the price above that resistance at 63.50, broken out to $65 and just above that. And the weekly looks pretty strong right now as well. That breakout on oil has also helped the S&P 500. So if you have a look at overall price action on the S&P, it's at the highest levels it's been now in approximately 8 weeks. Just consecutive gains here since we put in the lows, going back to the 20% correction that we saw over the month of November and December of 2018. If you look at that on the monthly chart, you've also got a lot of follow through there on the S&P 500 on the monthly. So it's really done incredibly well to just continue to drive higher. You can see week to week at the moment. In fact, this week the lows were at 2,700. Didn't even get below 2,700. It's 65 points up from those lows at the moment. We've had quite considerable follow through on the S&P 500, and it's really just continued to drive higher since we put in the lows there, going back to the end of December of 2018, when we had that low get formed on Christmas Eve, in fact, only to rally back here over Boxing Day there, where we saw that tremendous move and capitulation to the upside. Now, moving over to other markets we've got on the radar right now, I do like platinum when it gets below $800. You can see it's actually breaking out at the moment. A lot of consolidation at that 780 zone, so it's continued to ricochet and find support between 780 to 790. It's holding firm at those levels, and you can see it's already breaking above the daily highs there, and this is the sort of price action I would expect at that zone of support. So it tends to be an accumulation zone. Each time platinum gets back to around 780 to 775, it doesn't spend long, or it doesn't spend long below $800. We've got a long on platinum. It's moving quite well today. It's up 0.65% on the day. It's one of the strongest performing of the commodities alongside oil at the moment. So it's moving quite well today, and we're continuing to see more follow through overall on the metals. If we then move it over to silver and look at that on the weekly chart, to me, silver's just consolidating still around the 1560 level. The gold to silver ratio right now is suggesting that gold is going to outperform silver over the course of this month, and we're seeing that at the moment. So if I had to pick out of the two which one I would rather add positions to, it would be gold rather than silver, given the gold silver ratio is breaking out to the upside at the moment, which favors gold strength over silver. That said, you've got a lot of support at that 1550 layer. We seem to be springboarding off that zone. We could see it just manage to bounce higher into some sort of bull flag going into next week based on the weekly. You've got a lot of support going back historically to 2016, 2017 at that swing low of 1550 to 1560. Buyers are definitely coming in and accumulating at that layer of support, much like they were doing so going back to this major layer previously as well, which took the price down to around the 1388 zone. This is a major buy zone and accumulation zone as well at around the 1560 level. So I would watch out for that, because we might start to springboard off that level as we go into next week. You can see gold here is getting back up again on the day. Gold might start to move more later in the session. I've seen it before where gold will suddenly break out. In fact, we've been on these sessions with the Commodities Corner on a Friday at 4 o'clock London time when gold's been breaking out above the 1300 zone. That's happened before. That happened a few weeks back, and we saw that price action. So overall, metals can be quite active, and commodities in general on a Friday here, and that's what we're seeing at the moment. That brings me over to the commodity currencies. So basically, my overall thoughts on this right now is normally the commodity currencies, Australian dollar and New Zealand dollar, are strong anyway over February. New Zealand dollar has had very strong recovery this week after the sell-off last week, and it's found support at major 0.67 handle there, and you've got an inside candle on the weekly there. It looks bullish going into next week if we break above the weekly highs. I don't want to chase the move on the New Zealand dollar, so I'd rather trade the correlation as well via the Australian dollar US dollar, which will lag a bit, but you can see on the weekly Australian dollar is positive. It's coming to an accumulation zone, and I'm looking at a reversal around the 0.71 handle. So I'd look for more upside going into next week based on the weekly, and look for a breakout above this week's highs going into next week. Obviously, if that doesn't happen, then you might get a retest of the 0.700 handle, which is just below there. But at the moment, we're getting supported at quite an important a major accumulation zone, but also we capitulated here back in December, and we're now forming somewhat of a V-shaped reversal base there on the Australian dollar. So I'm positive on the Australian dollar at the moment. New Zealand dollar is leading out of those two commodity currencies right now. With the breakout that we've seen on oil here, the anticipation would be that going into next week, US dollar CAD could start to weaken. It's not ready yet, but if it rolls over, breaks below the weekly lows, that's where US dollar CAD might just pick up momentum to the downside, roll over, and then lead into more pressure to the downside, in which case it might provide a sell short opportunity, but we're not quite there yet at the moment on US dollar CAD, but I'm watching out for that. I'm also looking at the potential to sell back into the pound US dollar next week, only if the price structure confirms it. If you just draw on a trend channel, just put it on the 4-hour chart, for example, the resistance zones that we've had so far, we keep rolling over from these zones. We keep seeing tests of resistance and then no real follow through, and then an opportunity to really sell it. If we go over to the weekly chart as well, you'll see what I mean there. So the weekly chart at the moment, it still looks bearish going into next week, but we have to a certain degree completed the move. 3 weeks worth of sell off there, so we've been selling it. We've actually had 3 different positions on over the last couple of weeks of last couple of weeks for the first 2 weeks of February, where this will be the 3rd successful trade that we've had this week with bank profits when it's continued to pull back here. The weekly still looks vulnerable in my opinion going to next week. If it closes bearish here, it could still roll over, take out the swing lows. 1.285 handle might actually be a good opportunity to sell it. Fridays can be a bit bizarre in terms of price action. I don't know that I'll actually want to have a trade like this running into the close, where it could still, we could see a change in price structure between now and the close, and I don't really want to add the extra swap charges and so forth by getting into a trade on a Friday afternoon. But I would be looking at that on, unless I'm in and out of it on the Friday, that's fine for day trading, but I don't necessarily want to add this as a more of a swing trade. I'd rather wait until the Monday open to execute it, but I am looking at potential to sell back in to the pound going into next week. Had a few questions about the euro. Do I think it's buy? What do I think about it at this level? Well, there is some support definitely coming in at this zone of support, the 1.121 handle. Overall, yeah, it is getting some support at that layer. Maybe it will follow through going to next week, but to me on the weekly, it still looks a bit vulnerable, excuse me. And normally the month of February is not really a strong month for the euro, so it needs to do some work here. If we have a look at the daily chart, for example, in the euro US dollar, it is getting some support, but it's still weak. It's below the 80 MA, 21 MA. The trend is down. It's been quite vulnerable, so I'm not really overly optimistic on the euro at the moment, or the pound going to next week. Rather, if you're going to look at a long, I'd rather look at Australian dollar or New Zealand dollar, but a better entry. Don't chase the New Zealand dollar, in my opinion. So with that, I'll just finish off with a bit of an update in terms of what we're looking at trading plan wise going to next week. So basically, I would perceive that on gold as a bull flag, which is now confirmed to break out above a lot of that resistance. We've seen multiple times gold do this, where it would just break out from these layers of resistance. It seems to be doing so at the moment. As long as it holds above the 1310 level into the close today, it's going to be just another bull flag in a multiple bull flag upward trend that we've seen throughout 2019 so far. So it looks like just the continuation pattern. Notice as well, it bounced precisely off the 21-day moving average as well. So it's just definitely traders have been looking at that layer to get back in on a bounce. And also they've been looking at the 1300 level, excuse my phone. They've also been looking at the 1300 level as a zone to buy back in and accumulate. 1300 has provided a lot of support so far for gold. So basically we're maintaining our long on gold going into next week. I'm looking to add to oil. It might be it breaks out next week above this neckline, but if it doesn't break out today, I'll look to potentially get into a breakout trade on oil next week as well. Silver's still holding around that 1560 level, which has been very important in the past. So we may just continue to consolidate. I like platinum for a buy sub $800 as I mentioned, and I also like Australian dollar, US dollar for potentially more upside if it breaks above the highs as well as we go into next week. So those are really some of the top trade ideas that we're looking at. Bit of a trade idea and a trading plan there as well, guys, as we go into next week. Now, if you would actually like to become a private client at the Gold and Silver Club and join us, you do get access to the following. So basically, as a private client of the Gold and Silver Club, you get access to our exclusive live trading room webinars during the week. You have real-time trade alerts, which are delivered to you with our trade ideas and trade management. You get access via our private members academy, via your logins, to all of our trading research and market insights, and you have access to support and mentoring. So essentially, to get access to that and to make an application, it's just www.jointhegoldandsilverclub.com or www.jointhelivetradingroom.com to make an application in order to join us at the Gold and Silver Club. And of course, as I mentioned at the start of the session, we'll be putting out a fresh report this weekend, guys. So if you just hop over to YouTube, search for the Gold and Silver Club, we've got a lot of videos on there. Just make sure you're subscribed to our YouTube channel, because then you'll get the latest report that we'll put out this weekend as well. Okay, fantastic. So with that, I wish you all good trading. Enjoy the rest of your day. Thanks again to Sharice and the team at binary.com. We'll definitely catch you back here on the next one, and have a great weekend. Okay, guys, all the best and bye for now.